Gold is on the brink of a major shift. Its price has surged to nearly $3,750, driven by a mix of economic uncertainty and geopolitical tensions. But here's where it gets controversial. While some see this as a sign of strength, others argue that the market's reaction may be overblown. Let's break down what's really driving this trend. The price of gold has climbed to nearly $3,750 in early Asian trading sessions, fueled by expectations of further U.S. interest rate cuts and ongoing global instability. This surge reflects a key shift in investor sentiment, as people increasingly turn to gold as a safe haven asset during times of volatility. Think of it as a financial insurance policy for uncertain times. The Federal Reserve's recent decision to cut rates by 25 basis points, a small but significant move, has already sent ripples through markets. The Fed's dot plot, a visual tool showing officials' projections for future rate cuts, reveals that most policymakers expect 2 more rate reductions in 2025 and 1 in 2026. Lower interest rates reduce the cost of holding gold, which doesn't generate income like traditional investments. This makes gold more attractive when borrowing money becomes cheaper. Geopolitical tensions are another big factor. Last week, NATO issued a stark warning to Russia, threatening to use military and non-military tools to defend itself after Moscow violated Estonian airspace. Such events trigger a natural response. Investors flock to assets like gold, which are seen as stable and reliable. It's like a stock market crash. People panic and rush to safer bets. However, there's a catch. Fed Chair Jerome Powell's cautious remarks about the timing of the next rate cut have raised questions. He emphasized the need to balance labor market concerns with inflation worries, leaving some investors unsure whether gold's upward trend is sustainable. This creates a dilemma. Should we trust the Fed's signals or the market's instincts? Let's dive deeper into the world of gold. Historically, gold has been a symbol of value and trade, used for everything from jewelry to storing wealth. Today, it's more than just a shiny metal. It's a hedge against inflation and currency devaluation. Central banks, especially in countries like China and India, are buying vast amounts of gold to strengthen their economies. In 2022 alone, they added 1,136 tons, worth $70 billion to their reserves, a record high. Gold's relationship with the US dollar is crucial. When the dollar weakens, gold often rises, offering investors a way to diversify their portfolios. Conversely, when the dollar strengthens, gold tends to fall. This inverse link means that gold's performance is closely tied to the health of the global economy. But remember, gold is priced in dollars, so its value is always influenced by the dollar's strength. Now, here's a question for you. Is gold still the best bet for safety in today's unpredictable world? Or is its appeal fading as other assets become more reliable? Share your thoughts in the comments. We're all in this together. This article contains forward-looking statements that may not reflect actual outcomes. Markets are inherently risky, and investing involves potential losses. Always do your own research before making decisions. FX Street and its authors make no guarantees about the accuracy or timeliness of this information. Investing carries significant risks, including the possibility of losing your principal.